Hey everyone, welcome back to We Are Cosmic, your go-to place for all things crypto, blockchain, and finance explained in a way that actually makes sense. If you hold XRP, pay close attention because today's breakdown is crucial for anyone serious about understanding market moves, short-term volatility, and long-term opportunities in the crypto space. Trust me, the next few minutes will give you clarity that most traders and holders are completely missing out on. So here's the thing. Next week is shaping up to be a major event for markets in general, and for XRP holders in particular. There's a lot happening, and if you're not prepared, it could feel like a wild roller coaster. But don't worry, I'll walk you through it step by step in simple terms, so you know exactly what to expect and how to think about it strategically. Let's start with the macro side of things because that's going to influence short-term moves for XRP and other cryptocurrencies. President Trump recently announced a 15% global tariff, which is already creating a lot of concern in financial markets. Combine that with upcoming economic indicators, consumer confidence data, initial jobless claims, January PPI inflation, and a staggering 11 Federal Reserve speaker events scheduled this week, and you can see why traders are paying close attention. These are the numbers and events that set the tone for risk appetite, liquidity flows, and overall market sentiment. Now, it might sound overwhelming, but here's the key takeaway. Initially, these events are expected to cause a negative reaction in markets. Think of it like a small storm hitting a pond. The waves may shake things up temporarily, but the very next step, the rebound, could be surprisingly strong, and that's where you want to be ready to act. I'll explain why this negative to positive sequence is likely based on how markets historically respond to tariff announcements, inflation data, and Fed signals. But XRP isn't just sitting there reacting to macro events. It's doing something phenomenal behind the scenes. Tokenized real-world assets, RWA, on the XRP ledger have exploded over 266%, reaching $1.44 billion. This is massive. Tokenized assets are real-world things converted into blockchain-based digital tokens, commodities, U.S. treasuries, funds, and other financial instruments. For XRP, this growth is not just numbers on a chart, it's actual adoption by institutions and proof that the network is being used for serious financial activity. To put it simply, XRP is not just a speculative coin anymore. With companies like Ripple, G Treasury, Open Eden, Ondo Finance, Guggenheim Treasury Services, Arcax, and Zonix all exploring tokenization on the XRPL, we're seeing real-world utility scale up rapidly. And if you think about the bigger picture, major financial institutions such as MasterCard, BlackRock, and Franklin Templeton are showing interest in XRPL for settlement and institutional DeFi. This is a clear signal that XRP's ecosystem is expanding far beyond retail traders. So here's your first takeaway. While macro events may create short-term volatility, XRP's long-term story is strong. Real institutional adoption, growing tokenized assets, and the XRPL's infrastructure improvements all point to massive potential utility and price upside in the future. But before we jump into price predictions, let's make sure we understand the short-term risks, because knowing both the danger and the opportunity is what makes a smart crypto holder or trader. If you're excited to learn more and want to stay ahead, stick around because in the next part, I'll break down exactly how these market events could impact XRP in the short term, what you should watch for, and how to prepare for potential volatility without panicking. And before we dive deeper, don't forget to smash that like button, subscribe, and turn on notifications. Here on We Are Cosmic, we break down crypto trends with clarity, honesty, and insight, so you can make smarter decisions, not just guess at market moves. All right, now that we've set the stage with the big picture, let's get into the short-term market risks that could affect XRP and other crypto assets. If you're holding XRP, this part is critical because understanding these risks can help you avoid panic selling and make smarter decisions. First, let's talk about the 15% global tariff announced by President Trump. This isn't just a headline, it's a market-moving event. Historically, tariffs create uncertainty in both stocks and cryptocurrencies because investors start pricing in potential economic slowdowns. This week, we can expect an initial negative reaction when the markets open. The way it usually works is that traders panic at first, selling risk-on assets like tech stocks and crypto, including XRP. But after the initial reaction, markets often stabilize once investors digest the news and focus on fundamentals. Next up is economic data. This week, we have consumer confidence data, initial jobless claims, and PPI inflation for January. Each of these numbers tells a story about the health of the U.S. economy. For instance, strong consumer confidence can support markets, while rising jobless claims could signal economic weakness. The Producer Price Index, PPI, is especially important for XRP holders because it influences Fed decisions. If inflation is around the expected 3% headline, the Fed is unlikely to make sudden rate cuts or aggressive moves, which keeps short-term market volatility high. Speaking of the Fed, we have 11 Fed speaker events this week. That's huge. Every statement from Fed officials is scrutinized for hints about interest rates, monetary policy, and liquidity. For XRP, this matters because crypto often reacts to broader macro liquidity conditions. If the Fed signals caution or hints at slowing support for risk assets, expect some choppiness in XRP's price. Conversely, if they hint at continued stability, the market could rebound faster than most expect. Now let's combine these factors: tariff news, inflation data, and Fed commentary. The likely scenario for Monday through Wednesday is initial market weakness. Risk on assets like XRP may see a dip as traders sell in reaction to uncertainty. But remember, this is largely retail panic selling, not a reflection of XRP's long-term potential. Experienced holders and institutions often use these dips as buying opportunities. Another thing to watch is oil prices, which surged 5.6% last week. Rising oil often signals inflationary pressure, which can make investors more cautious with risk assets. Crypto markets, including XRP, are particularly sensitive to these risk-off environments. So in the short term, expect volatility and be ready for a few bounces and dips. Here's the good news. While these short-term events may temporarily pressure XRP's price, the long-term fundamentals remain strong. Tokenized real-world assets on the XRPL have grown massively. Institutional adoption is accelerating, and the network's infrastructure is improving. In other words, even if the markets are jittery this week, XRP's ecosystem is still expanding in ways that could support higher prices down the road. So what should XRP holders do right now? First, stay informed and avoid panic selling. Second, pay attention to market open reactions, especially on Monday. These early moves often set the tone for the rest of the week. Third, if you're planning to buy more XRP, this short-term dip could be a strategic entry point rather than a reason to sell. Finally, it's worth noting that many institutions are now experimenting with tokenized bonds, commodities, and funds on the XRPL. This means that even if the macro environment causes temporary dips, structural demand for XRP is increasing. When these companies fully on board, the network activity could drive significant real-world demand, which can positively influence price and utility. Now that we've covered the short-term market risks, let's shift focus to something far more exciting: the explosive growth of tokenized real-world assets, RWA, on the XRP ledger, XRPL, and what it means for the future of XRP. This is where the long-term story comes alive, and it's exactly why XRP is being watched closely by major institutions. First, let's clarify what tokenized assets are. Simply put, these are real-world financial instruments, like commodities, U.S. treasuries, bonds, and funds converted into digital tokens on a blockchain. This allows them to be traded, settled, and managed in a faster, more efficient way. On the XRPL, tokenization has accelerated dramatically in recent months. In fact, the total value of tokenized RWAs has grown over 266%, reaching $144 billion. This is not just hype, it's real financial activity taking place on a blockchain that's built for speed and low cost. Let's look at some numbers. Tokenized commodities on the XRPL hit $1.1 billion, up 920% in just 30 days in early February. XRPL also dominates the tokenized U.S. Treasuries market, holding 63% of major token supply, while the 30-day growth rates place XRP among the top blockchains globally for RWAs. These numbers show that XRPL isn't just another blockchain. It's becoming a central hub for real-world financial asset tokenization. So who is behind this growth? First and foremost is Ripple, the company behind XRPL. Ripple has been pushing real-world asset adoption through infrastructure improvements, stablecoin issuance, and strategic acquisitions and partnerships. G-Treasury and other large firms are starting to tokenize their assets on XRPL, setting the stage for a slow but steady increase in institutional adoption. Think of it as a trickle that will eventually turn into a flood as more firms get comfortable using the network. But Ripple isn't doing this alone. Major institutions and issuers such as OpenEden, Ondo Finance, Guggenheim Treasury Services, Arcax, Zonix, and Aviva Investors are all experimenting with tokenized bonds, commodities, and funds. These are not small players. These are recognized financial institutions testing XRPL's capabilities. And beyond these direct participants, broader signals from firms like MasterCard, BlackRock, and Franklin Templeton show growing interest in using XRPL for institutional DeFi settlement and liquidity solutions. This is a big deal because it validates XRPL as more than a retail-focused blockchain. Now, why does this matter for XRP holders? Tokenization drives structural demand for the XRP token itself. Every time an institution uses XRPL for settlement or liquidity, it requires XRP as a bridge asset in most cases. This creates real-world usage, which is fundamentally different from speculative trading. Over time, as trillions of dollars in transactions flow through the XRPL, demand for XRP could rise significantly, not because of hype, but because it's a necessary utility for real financial operations. Here's another important point. Tokenized assets are not just about volume. They also expand XRP's utility. They create new opportunities for XRP to act as a liquidity bridge, support institutional settlement, and integrate with other DeFi tools. This means XRP's long-term value isn't dependent on short-term market sentiment. It's tied to tangible use cases that are growing every month. It's also worth noting that this adoption is happening gradually and strategically. Ripple and its partners are testing infrastructure, monitoring demand, and onboarding companies slowly to ensure the network can handle increasing activity. This careful approach helps avoid overloading the network while steadily proving XRP's utility. We've explored short-term risks and the massive growth of tokenized real-world assets on the XRPL. It's time to connect these fundamentals to XRP's price potential. This is where theory meets opportunity and why long-term holders and strategic traders should pay attention. First, let's recap why XRP has strong upside potential. The XRPL is seeing record growth in tokenized assets, including commodities, bonds, and U.S. treasuries. Institutions like Guggenheim Treasury Services, Arcax, and Zonix, along with interest from MasterCard, BlackRock, and Franklin Templeton, show that XRP isn't just speculative, it has real-world utility. Every transaction on XRPL using XRP as a bridge or liquidity asset generates demand for the token. This is a critical point. Price follows utility. Now let's break down the main drivers that could push XRP higher in the future. Increased network activity. As more institutions tokenize real-world assets, the XRPL will see more transactions. This is not just theoretical. Every bond, commodity, or fund tokenized and traded requires network activity, creating natural demand for XRP. Structural demand through reserves and trust lines. XRP's design allows it to act as a bridge currency. When institutions interact with XRPL, they create trust lines and hold XRP for settlement purposes. This structural demand grows over time and is not dependent on market hype. Expanded utility as a bridge and liquidity asset. XRP is increasingly being used in settlement systems, cross-border payments, and institutional DeFi experiments. This means that even if short-term volatility occurs, the underlying adoption continues to build, which can support higher prices over time. Institutional adoption. This is perhaps the most significant factor. When large institutions adopt XRPL for real-world financial operations, XRP gains legitimacy, liquidity, and consistent demand. Unlike retail-driven price pumps, this adoption is sustainable and less likely to be influenced by sudden market sentiment swings. Considering these factors, many analysts project that XRP could reach $10 per coin or more once these tokenized assets and institutional integrations scale fully. The reasoning is simple. Trillions of dollars in real-world transactions could flow through XRPL using XRP as a bridge. Even a fraction of that demand could significantly influence its price. It's important to emphasize that this is not an overnight event. Ripple and its partners are onboarding institutions gradually to test infrastructure and ensure smooth integration. This trickle phase is currently in progress, but the roadmap clearly points toward much larger adoption in the near future. Short-term events like the 15% global tariff, inflation numbers, and Fed policy announcements can create volatility, but these are temporary pressures. The long-term story, driven by real adoption, tokenized assets, and structural demand, is strong enough to weather these fluctuations. In other words, dips caused by macroeconomic events could serve as strategic buying opportunities for those who understand the fundamentals. Let's also consider the psychological factor. Many retail investors panic during short-term dips without understanding the institutional developments behind XRP. By contrast, informed holders who track XRPL adoption trends, tokenized asset growth, and institutional experiments have an edge. They can make calculated decisions based on utility and adoption rather than emotion or FUD, fear, uncertainty, doubt. Finally, combining short-term volatility with long-term adoption, the strategy for XRP holders and traders becomes clear. Watch for early week market reactions to macro events and potential dips. Use those dips as opportunities to accumulate or hold XRP. Keep an eye on XRPL adoption trends, tokenized asset growth, and institutional activity. Recognize that long-term price potential is tied to real-world utility, not speculation. We've analyzed XRP's long-term adoption and price potential. It's crucial to focus on short-term risks, particularly geopolitical events and how they may impact XRP in the coming days. Understanding these factors will help you protect your positions and even capitalize on market movements. First, let's talk about geopolitical developments. The recent 15% global tariff announced by President Trump is a classic example of a geopolitical shock that can immediately affect markets. Tariffs generally create uncertainty, causing investors to become cautious and sometimes sell risk-on assets like tech stocks and cryptocurrencies, including XRP. This isn't a reflection of XRP's fundamentals. It's a market reaction to uncertainty. Next, we have inflation and jobs data. The PPI, Producer Price Index, for January and jobs reports indicate whether the Fed may intervene in the economy. Current expectations suggest inflation around 3% and unemployment close to 4.3%, slightly above the Fed's target of 4%. This combination makes it unlikely for the Fed to lower interest rates soon, which adds short-term bearish pressure to markets, including XRP. Traders need to monitor these numbers closely, especially early in the week when markets often react the most. Oil prices are another factor to watch. Oil recently surged 5.6%, which often signals inflationary pressure and can trigger risk-off sentiment in broader markets. In such scenarios, cryptocurrencies, including XRP, may experience heightened volatility. These short-term pressures are normal and should be expected. The key is knowing how to respond strategically rather than emotionally. So, what's the right strategy for traders and holders? Here's a simple framework. Expect volatility. Short-term dips and rebounds are natural. Use these moves as opportunities rather than panicking. Focus on fundamentals. XRP's long-term adoption, tokenized asset growth, and institutional interest remain strong even if short-term prices fluctuate. Set risk limits. Always define how much you're willing to risk on a trade or position. Using stop losses or position sizing can protect your capital during volatile periods. Monitor early week movements. Markets often react immediately to macroeconomic and geopolitical news. Observing the first trading sessions of Monday through Wednesday can give clues about the week's trend. Another point to consider is retail panic selling. Many retail investors sell XRP when headlines create fear, even though the fundamentals remain strong. Experienced holders recognize that these dips are often short-term market noise and may use them to accumulate more XRP at better prices. Institutional developments continue in parallel. Companies like G-Treasury, Ondo Finance, and Arcax are gradually tokenizing assets on XRPL. As this adoption grows, demand for XRP as a bridge currency and settlement tool increases, creating a structural support for price even during turbulent times. Here's the main takeaway. Short-term geopolitical and macroeconomic risks will create bumps in XRP's journey, but these events are temporary. Long-term adoption, tokenized real-world assets, and institutional usage are what drive sustainable growth. Smart holders focus on both risk management and opportunity identification. Finally, for traders looking to maximize returns, combining technical monitoring, fundamental awareness, and strategic entry points during dips can provide significant advantages. Remember, patience is key. XRP's short-term swings are part of a larger story that's unfolding over months and years. 1. Understanding short-term volatility. Next week is shaping up to be highly volatile, thanks to factors like the 15% global tariff, inflation data, jobs reports, and multiple Fed speaker events. These events will likely cause short-term dips in XRP and other risk assets. Remember, this is primarily retail panic selling and temporary market reactions. It does not reflect the long-term strength of XRP. Key points to keep in mind. Market open sessions early in the week, Monday, Wednesday, are usually the most sensitive to news. Rising oil prices and mixed macroeconomic signals may push traders to sell risk on assets temporarily. Short-term moves are opportunities for informed holders to accumulate or hold strategically. 2. Long-term adoption and XRP utility. Despite short-term volatility, XRP's fundamentals are extremely strong. Tokenized real-world assets on XRPL have surged over 266%, with $1.44 billion in active tokenization. Major financial institutions and issuers, including G-Treasury, Guggenheim Treasury Services, Ondo Finance, Arcax, Zonix, and Aviva investors, are testing tokenized bonds, commodities, and funds on XRPL. Interest from MasterCard, BlackRock, and Franklin Templeton signals growing confidence in XRPL as an institutional settlement and DeFi platform. All this means XRP is becoming more than a speculative token. It's evolving into a real-world bridge asset that has structural demand, utility, and growing adoption. 3. Price potential. With increasing institutional adoption and real-world use cases, analysts project that XRP could reach $10 or more once full-scale adoption occurs. Factors supporting this include increased network activity from tokenized assets, structural demand through trust lines, reserves, and liquidity needs, expanded utility in settlements, cross-border payments, and DeFi integrations. Even though short-term dips may happen due to geopolitical or macro events, the long-term trajectory is positive, driven by tangible adoption, not speculation. 4. Strategic action plan for holders. Here's a simple, actionable strategy for XRP holders. Stay informed, watch economic data, Fed commentary, and early week market reactions. Expect short-term dips, don't panic sell, use volatility as an opportunity to buy or hold strategically. Focus on fundamentals. Keep an eye on XRPL adoption, tokenized asset growth, and institutional interest. Risk management. Define stop losses and position sizes to protect capital during volatility. Long-term mindset. Remember, the true value of XRP lies in real-world adoption and network utility. 5. Final thoughts. In summary, XRP is at an exciting crossroads. Short-term volatility will test holders, but the explosive growth of tokenized assets, strategic institutional adoption, and real-world utility provide a strong foundation for long-term gains. By combining awareness of macro events with insights into XRPL adoption, holders can navigate the market confidently. If you stay patient, informed, and strategic, XRP's journey through short-term turbulence can lead to significant opportunities. This is a rare moment in crypto where both the fundamentals and utility are aligning with potential price upside. And that's why on We Are Cosmic, we focus not just on market hype, but on real insights that help you make smarter decisions. If you've been following along, make sure you like, subscribe, and turn on notifications. This way, you stay updated on critical XRP news and market strategies. Remember, short-term dips are temporary, but XRP's long-term story is real, actionable, and potentially game-changing. Keep calm, stay informed, and let the adoption story unfold. Peace out, and I'll see you in the next deep dive.